The money supply and inflation. That is what we're going to look at today for the OGs out there. First of all, thank you for being a subscriber. It greatly helps the channel, especially as everything is down across the board. People have had max capitulation and left. And of course, we are still trying to make content. So thank you very much. Now, you know about inflation, you know about interest rates, but you might not know about the money supply and why it matters. There are many famous economists that talk about how the government is solely responsible for inflation, and hopefully that is what I'm going to show you today. The breaking news coming out today is, of course, the global money supply is at an all-time high. But more importantly, the American money supply is not. And I've got some charts to show you about that, as well as talk about the Bitcoin chart. So strap yourselves in and let's go and have a look. And this is the chart that everybody is tweeting about. This is the global M2, the global money supply. How much money is there in the world swilling around? And why is that important? Well, very simply put, inflation is caused by a growth in the money supply. The money supply is provided by your government. So if you are based in the UK or America, for example, or India, your government prints money. We talk about the money printer go burr. That is when the money supply is increased by your government. Now that is not great, because the more money in a system, the more inflation you have to rise to allow the cost of your goods to find the equilibrium between supply and demand, the free market economy. Now, for people who don't have a lot of money, for people in the lower classes or the lower income brackets, inflation is a deadly killer. We talked before on the channel about a 2% target for inflation. 2% inflation means that your 100 euros today is worth 98 euros this time next year. They don't care about the money in your pocket. They care about you working and generating tax dollars. And they tax you enough so you don't cause inflation to push that any higher. So inflation is a silent stealth tax. And over time, your money is eroded away to zero. But to combat this, what do? They allow inflation to run at 2%, but they print maybe 4, 5, 6% of the total supply every year, which is what we're going to go and have a look at. So they know inflation is 2%, but banks will only offer you half or maybe 1% interest on your assets. So you have no way out unless you are incredibly rich. Now, if you're invested in the stock market, traditionally, you get between 7 and 8% per year return. Why? Because stocks and shares are linked to companies that generate more and more money based on more money in the system. Really simple to understand. And if you hold shares in those companies, you will be hedged against inflation. The only issue is every 7 or 8 years, there is normally a stock market correction or crash. That's the only downside. But if you're in it for 20, 30, 40 years, you're always going to be making the 7 or 8%. And that's a S&P 7 or 8%, not investing in individual stocks and shares like Apple or Google or Microsoft. Of course, that would be different. Overall, it goes up roughly at the rate of the money supply. Now then, you know that your money is going down in value because the government is printing more and more money. You know that they tax you enough so you don't break the equilibrium. So you can't spend too much to push inflation up. And why do they do that? Because they want to print money. Very simply put. When we came off the gold standard 80 or 100 years ago, that meant that the government didn't need to have assets to back the money supply. And that is where the issue is. And this first chart is going to show you what I am talking about. So this is a chart that shows you the American money supply and inflation overlaid against each other. And we're going to have to zoom in a little bit to see some precise movements here. One follows the other. I told you probably 2 years ago now that the American government printed 20 or 30% of the total amount of dollars that ever existed. And they did that here. Okay, they did that here. And they went from around about 15 trillion to about 18 and a bit trillion. So just over 20%. That was in direct response to COVID. They printed and printed and printed. Now, I told you before, they can get away with 5 or 6% money printing every year. Okay, you can look back in time and you can see this blue line moving up is the money supply, and that red line is inflation. As you can see, it's pretty much under control. You've got a few spikes here or there, but it's pretty much under control. So they're printing as much money as they can afford to get away with without causing inflation to go up. And then COVID happened. And COVID here caused the money supply to go up. And what did I say to you a minute ago about money supply? It causes inflation to go up. Now, inflation didn't immediately shoot up because the money has to filter its way through the system. But look what happened. The money supply spiked and inflation spiked. If you have more money, or you're given money by your government, you're given stimmy checks, as they're called in America. In the UK, I think you were paid 80% of your salary. I can't remember what they called it in the UK. But what happened then? You went out and you spent it. You had nothing to do. You were locked in your house. So you went out and spent your money. And you went and bought takeaways. You ordered online from Amazon. You ordered online from ASOS and Pretty Little Thing and all of these types of places. You also went on social media, YouTube, you went on Facebook, you went on Instagram. So Microsoft, Facebook, or Meta as it's called, Apple, Google, Alphabet, they all made an absolute fortune. Advertising revenue went through the roof, but you spent your money. You didn't sit on it, you didn't save it. And what happened was inflation absolutely ran away. And then we get to the second box, which is rates. This is where Chairman Powell, who knows damn well what happened, went, right, we now need to constrict the economy, and we actually need to take money out of the system. And if you look down here, you will see the beginning of this. And this is called This is called QT, quantitative tightening. That's where they take money out of the system. So if you put money into a system, you cause inflation. If you take money out of the system, you cause deflation or a decrease in inflation. And that's exactly what's happened. So all of this period over here, we had the money printer turned on. We've turned the money printer off, and inflation has absolutely plummeted to the downside, which is exactly what will happen. You know that your goods and services are 30 to 50% higher today than they were 4 years ago. The money printer printed roughly 30% of your money supply. That extra on top, that is either profiteering from the companies, or it's due to the rise in gas prices, which have also come down, but you're still paying more. So what you're seeing is, you're seeing the money supply shrinking ever so slightly, which is causing inflation to come down because you're just sucking the life out of it. But now we are back at the level that we were at. If we go through here, if you look at where we are now, we are back at pretty much where we were. So we're back to where we were before COVID and when we were 2.8, 2.5, 2.4%. So we're back in that range. Now, what does this mean? You've heard the expression, and I made it before, money printer go burr. And what that means is, I would expect this dip to suddenly go like that, in the same trajectory that it was going over here, okay? Because they need to print money. They need to pay for the military, they need to pay for healthcare, they need to pay for lots of things. So they're going to turn the money printer back on. Now, inflation is back down here, and it's likely to do that the same way it did it over here. And remember, some inflation is inflationary. People spend more in December because of the Christian holidays. People spend more. So inflation has a seasonality to it. In the summer, people go on holiday, so sun cream goes up in price. Christmas, alcohol, for example, or turkeys go up in price. So there is seasonality, which is why you don't get a flat rate on inflation. But we are pretty much back in the zone. The money printer will go back on. That's quantitative easing. Now, this is what's important when we go back to the Bitcoin price. Bitcoin, since 2021, okay, since 2021, which is all the way back here, has been since here. This entire period here, Bitcoin has been in a period of quantitative tightening. The money has been sucked out of the economy, okay? So why are we up here at all-time highs? Because we have institutional demand. Institutional demand came in here. This is when it started, because that's when BlackRock started buying Bitcoin. That's when Ethereum was started to be bought up. Now, we've had our breakthrough, and we're probably going to have another one down here. Now, I said on the stream on Friday, what's going to cause this to happen? Quantitative easing is going to cause this to happen. Bitcoin has broken all-time highs in a period where we've had quantitative tightening. All of this pump over here, this was all during a period where money was being printed. The 20% money supply increase probably caused that second top. Had we not have COVID, however, we might have done this. Okay, so that was COVID. That was the second top. Quantitative tightening came in, and then that sucked the money markets dry. We have other things to bear in mind, which we're not talking about. The point of this is quantitative tightening is taking the excess money out of the system. Quantitative easing is putting in as much money as they can afford to get away with while keeping inflation between 2 and 3%. They don't care how much your money is worth in your pocket. They care about stocks and shares going up more than 3 or 4 or 5%. That's all they care about. Okay? So, I reiterated my point that by April, we are going to be at a new all-time high because Powell has to cut rates. He has to cut rates either in March, April, or he tells you in March he's going to cut in April. Something has to happen because we now have inflation under control. That is going to lead the market on to believe that we're going to get quantitative easing and the money printer is going to get turned back on. Now, the issue is timing. The timing of these interest rate cuts is the problem. If we're delayed by another month and we don't get it till May, we've got 6 months left. So what we need to see is, if you copy that curve, for example, if we see this, oops, let me try and drag that up. There we go. Right. If we see this, we're basically going to run out of time to get towards some of these targets that people are talking about. Okay? That's the issue. Rate cuts in March, rate cuts in April, or one of the two, and we've still got 6-7 months left. We can do it. If we leave it towards May or June, we're going to struggle. I've still got my belief that we're going to get somewhere in the region of 150,000. I've said that for months and months and months. But I do think we can have another pre-summer pump up. But it all depends on the money supply. If the Russia-Ukraine crisis comes to a halt, which it's going to be, the Houthis are in trouble. Trump is trying to end war. He's also trying to cut waste. And what is he doing with what he is saving? He's put it into the Bitcoin Strategic Reserve, which is yet another period of high demand for Bitcoin. So it's all positive, even though it all looks so negative. It's all positive. And I'm trying to stay as focused as possible on the money supply, because this is what matters. If you overlay the money supply over the Bitcoin price, we spike when the money supply spikes. But that's what you would expect. The stock market will spike. Everything spikes. You put more money into the system, that money has to be put to good use. Well, what do you buy with it? You buy property, so property prices go up, you buy stocks, or you buy crypto. They're your options. So of course Bitcoin is going to go up with the money supply. And anybody that says any different doesn't understand how any of this works. But to get the money supply up, we need quantitative tightening to end. And that is where we need to see Chairman Powell turn around on Wednesday and say he's going to cut by 0.25%. That is where we are at. So thank you for watching this Sunday update for the OGs. I'm not going to put this back onto public domain. I'm just going to put this for the OGs. So thank you for watching. Again, once again, thank you for your support, and I will see you in the next video. You, as always, have been great. I've been Mike. Adios.